Today we are talking about the elephant in the room.
Domain, importantly, though, came out and with a downgrade. That's hardly surprising, surely, given where the housing market is.
Absolutely. But if you look at the share price, you wouldn't have thought the housing market was going through a trough. So clearly, share price has rallied really hard into this update, and they clearly have disappointed. They talked about the volume was down 13% and perhaps even weaker heading into the next quarter.
Stockland also seeing challenging conditions.
That's right. It's interesting that they talked about their retail property continue to experiencing very weak condition, and then they said their new residential lot sale is going through quite a challenging period as well.
All, of course, related to the consumer and the housing market. It seems to be a theme. However...
Okay, so two different businesses that are related to the housing. One of them being Domain, which is domain.com.au, is one of the two major portals to buy and sell, rent, also property, residential property, and the other one being Stockland, which is the property developer. So back to Domain, like I said, one of the two big ones. The other one is realestate.com.au. So Domain has seen the volume drop by 13%. So they're disappointed. And Stockland, the developer of property, have seen weaker numbers in their retail property, with housing, residential also dropped. This is not a surprise. We can probably expect more of that, but they're kind of leading indicators as to what's going on. They're not necessarily even leading indicators, because we know that the properties pulled back by 2 digits easily nationwide so far. What's interesting, though, is that some of the businesses will benefit from the housing slump. One of those businesses will not be financial stocks, banking is not going to be it. However, it is businesses like JB Hi-Fi, and this is coming up in this report, where JB Hi-Fi did pretty good. It is a sign of times when the economy is not doing really well. What tends to do well financially in their businesses is places like JB Hi-Fi and also, say, McDonald's, right? Because people don't have money for fancy dinners. Instead, they go out with family, and for not a lot of money, they get that satisfaction from short-term, short-lived, delicious food, if you can call it food, Meccas. They do well, and back to JB Hi-Fi, for example, people like to buy gadgets because they get that also hit of dopamine. And I know we've all done it. You get yourself a new phone or a new gadget that does this and that, and there's plenty of those now. Get yourself maybe a drone or something like that, and you feel good about it, and it didn't cost you all that much, but it costs you a lot less than having to buy what you really need in your house, in your life, which is a house, which is a shelter, because it's so far out of your reach.
However, JB Hi-Fi seems to be confirming its guidance and giving a fairly good outlook.
That's quite an interesting one as well. As you talked about, the consumer clearly is going through a tough period, but clearly they're still out buying gadgets. So JB Hi-Fi reaffirmed Australia is a little bit weaker, but New Zealand's a bit stronger. But what's important for this company is really May and June. The pre-tax period, the tax period is very, very important for them.
So you can't afford a house, but you can afford a stereo.
Absolutely.
Do people even buy stereos anymore?
And then we have a little hint on China's PMI, which is Purchasing Manager Index. Let's see how that's going.
China flash PMI came in a little below expectations today. What effect did that have on the market?
Okay, there's only so much of pretty women on TV talking to each other that I can take. So we're going to move on to the next story. Apparently, we got some good news for first home buyers. However, the mortgage defaults are rising.
Home prices still tumbling, tougher times for banks, but good news for first home buyers.
I think it's good because the price is going down, but we're not quite sure what's the benchmark, the bottom line.
Twice, 3 times.
And the mortgage stress test for ANZ, why boss Shane Elliott says home loan defaults are on the rise. The Great Australian House Price rout is continuing. Another 0.5% was knocked off national house prices in April. While the decline isn't as sharp as it has been, analysts don't expect that this is the last of the falls. The cooling market is being felt by the banks, with ANZ blaming sliding house prices for a 5% drop in its first half profits. Rachel Papazzoni reports.
You're bidding strongly, don't let it go now. At 341.5.
150,000, twice.
Third and final time at 790. Are you
looking for an opening bid and offer now for 106 Outram Street? Where would you like to start?
At just over $1 million, this 5-bedroom property in Perth is struggling to sell.
Don't have to rush me. Only got the one auction today.
These buyers certainly don't feel rushed. They're waiting for a better deal.
I think it's above what I view as the market value.
Not totally surprised. There's not that many people out there looking to spend this sort of money, purely because, again, the uncertainty.
And that uncertainty is showing up in the latest CoreLogic house price figures, which continue to slide nationally. But the decline may have slowed.
The market's still quite weak, just not quite as weak as what it was in 2018.
But the falls won't let up anytime soon.
The market's not at the bottom just yet. Sure, we're seeing the rate of decline is easing off, but our view is we probably will expect to see values drifting lower throughout the rest of the year.
Last month, house prices fell by 0.5% across the country. On average, they're down 7.2% since this time last year. In April, property prices fell in all the capital cities apart from Canberra. And while the downturn appears to have spread nationally, over the past 12 months, not all capital cities have entered negative territory. But Sydney and Melbourne continue to lead the declines.
I think it's good because the price is going down, but we're not quite sure what's the benchmark, the bottom line.
What we can afford in Adelaide could probably get you a 2-bedroom flat in Sydney.
While the market is starting to become more attractive to home buyers, prices are still out of reach for many.
That is falling from a very high level, and prices are in Sydney, say, back to what they were in 2016 roughly, but they're still 60% up on what they were in 2011.
The stresses for those with a mortgage are starting to show in the accounts of the big banks.
ANZ's results today show a 5% fall in profits in the last 12 months to $3.17 billion. And about 1 in every 100 borrowers is now more than 90 days behind in their mortgage repayments, a sizable increase since November.
Figures from the Reserve Bank of Australia this week show the growth rate of home loans hit a record low of 4% in the year to March.
And I think that does make a big difference in respect to people's confidence. Unfortunately, once upon a time, the banks would give money pretty easily, which is probably the other extreme, and now they've tightened right up. You've got the lead light through it.
While buyers take their time to decide when to enter the market, an interest rate cut as early as next week may help them make up their minds.
This next clip is a very surprisingly candid response to a question from Elise. When asked about the number of people falling behind 90 days or more, this is 3 months. Imagine 3 months you've fallen behind your mortgage repayments, and this is the number of people over 90 days. So that's 91 days, 99 days. I don't know, this is 6 months worth of time that you are behind in your repayments, your mortgage, and that's gone up, and he is not hiding it. Very surprising.
I questioned CEO Shane Elliott about whether we need an interest rate cut. He said possibly, and whether the spike in arrears will continue.
Well, it is a trend. There is a trend happening. There's been a slow increase in the number of people getting into difficulty repaying their mortgage. Out of our 1 million home loan customers, that number of people over 90 days behind went up by 500 over the years. But I imagine that will continue to get worse.
So one of the big 4 banks in Australia, CEO Shane Elliott, is saying, I imagine it will continue to get worse as far as the number of people falling behind their mortgage repayments of 90 days or longer. That seems to be the magic number, 90 days, because that is a very long time that you are unable to meet your mortgage repayment obligations.
How concerned should the banks begin to be about this?
There is a disturbing increase in home loan 90-day past due, and it's occurring in just about every state. WA continues to, unfortunately, have the highest arrears rates, and they're continuing to increase. But unfortunately, there's a growing problem in New South Wales as well, and the bank said it's related to the switch from interest-only to principal and interest loans.
Spot on. So you mean this is occurring because people are switched from the loans that should have never existed, which is interest-only, to P&I, principal and interest loans, and now, surprise, surprise, they aren't able to meet the repayments. I mean, this is a no-brainer. Common sense, one of those things that we always talk about, but as we know, it just doesn't exist in the world. The common sense, the no-brainer, the obvious things, they're there, but they're not really. And the last point I want to make here is how quickly things can get forgotten. So one day the banking analyst of Shaw and Partners gets interviewed and he's asked about what he thinks about banks being able to maintain, or 4 big banks in Australia being able to maintain the dividends that they are currently paying out, and here's what he says.
It's there. The dividend's been maintained at 80 cents a share. There's concerns with the outlook for the banks that they won't be able to maintain this. Do you think they will?
Yes, I think they will, and I think they'll be able to for some time.
The next day, the report comes out, and no surprises, NAB announces following.
NAB has slashed the all-important dividend, the first cut since the global financial crisis. Shareholders will have to make do with an interim dividend of 83 cents per share. That's down 16%.
I guess the biggest thing is the dividend cut. It's the first out of the big 4 banks to cut its dividend, and previously it was paying 99 cents, now it'll be paying 83 cents. So the market digesting that, but it wasn't all bad news. NAB's known for its business banking division, and we did see revenue there increasing, and we know that residential housing has been soft, so that was softer.
Okay, and that's definitely enough of me talking to you and to and more beautiful women on TV talking to each other. So I'll wrap it up. Thanks for watching again. Subscribe if you're not already. I'll make more of these videos, and take care.
Not quite the rate cut